in our second to last video, really pretty much our final video, because the final video is just the conclusion. But I want to talk about now some broad concepts and misconceptions. Lots of things out there about level 2s, lots of questions. So that's what we're going to address here. There's, you read the message boards and social media and all that stuff, and it's one of these things where people are kind of just spin the wheel, especially those that don't use level 2, and then a lot even that use level 2 that don't understand. They get the wheel that lands there or here, or somewhere over here. For us, we're going to get the arrow right here on the truth, and that'll include me admitting when I don't know. But it's one of those things, the things that I don't know, I'm not sure anybody really knows. Well, somebody knows for sure, but as far as message board people that are proclaiming stuff, they don't know for sure either. They just want to make it sound like they do. So I'm just going to be honest on areas where I'm not positive, but at least we're going to have a transparent thing of a lot of these broad concepts and misconceptions. So pretty much the genesis of this video was just I asked members of my trading group, hey, what sort of questions do you have about level 2s? What may be kind of confusing, or what are some of the kind of weird or unknown things in regard to them? So here we are. Are these the proof positive correct answers? No, they're not. Like I said, I'm going to be honest. If you're going to ask me, hey, I need some sort of survey or statistical analysis or a research report showing me that these are the right answers. No, I don't have any of that. But are these extremely logical answers? Yes, absolutely. Remember, is the stock market very black and white? No, it's not black and white. But is it complicated? It's complicated, but don't overcomplicate it. I mean, logical reason, logical common sense can go a long way. So that's what this video is going to be focused on. It's just some common sense. But at the end of the day, does any of this matter? Nope, it does not. I'm just doing it, like I said, because the members have requested it. So I'm going to give my thoughts. Maybe do a little lecturing here, because some of the stuff is just a pet peeve and it drives me up the wall when I see some of it. So I'm just going to give my 2 cents on it. But remember, as traders, at the end of the day, the only thing that matters is the direction of the price. I don't care what may be necessarily going on behind the scenes, because if what's going on behind the scenes is causing the price to go up or down, that's what I want to care about. So, the how I don't really care about. I just care about the what. And the what is, what direction is the price going? So some topics that, like I said, my members asked about, and that you see a lot out there. Some of these I've just thrown in there. But first is just execution, how fast are fills, what dictates the speed of those, kind of what's a partial fill and what dictates, partial fills. How does all that happen? Small prints, a lot of times you'll see just, orders go through and they're very small prints. And then if you actually assign a dollar value to them, it's like $3, so that doesn't necessarily make much sense. I'm going to look at signals, and I put those in 2, because signals are going to be small prints, but at the end of the day, they're just trader manipulation, and we'll get into that. We'll talk about the phrase painting the close. Had some questions saying, could you explain painting the close? I don't really understand what necessarily that means. And then this is one of my pet peeves, when people are saying, hey, it's thin to level XYZ, and that's partially true, but it's not really true, especially when you have level 2s and know what to look for. So maybe even know where I'm going with that. Low volume walkdowns, this is probably my biggest pet peeve of them all. It'd be between low volume walkdown and then the whole, they're holding it down, there being the MMs. The MMs are holding it down. These two, kind of a toss up in terms of what my biggest pet peeves are, especially because it's so obvious. Especially this one. I mean, it's very easy in terms of how to prevent them. It's a piece of cake, but for some reason people just don't understand. Anyways, the best transfer agent. We've kind of talked about this one in the case studies, but if you're trying to estimate share structure, level 2s are a very quick way to do it, and transfer agents can be a little slow in getting their data. But if you want just kind of a real-time, very streamlined, very efficient way to estimate the share structure, level 2s are great for that. And then just low floats and why those are playing with fire. Low floats are pretty. People like to throw that around out there, make it sound like it's such a bullish thing, but we'll address that in a little bit more detail. So let's talk about execution, speed and partial fills. How is execution determined? Why does it sometimes take a long time to get shares? You put in an order and then you sit there. Why is my order going through? Sometimes you put in an order of shares, and then there's other people that have orders sitting there. So for example, if you're on the bid and you see a couple other market makers sitting there at 5 cents, and then you put in an order in for 5 cents, what priority of shares is it, when more than one person wants them? Who gets them first? Who gets them last? All that. I really wish I had an answer for all this, but no one really knows, in all honesty. There's no such thing as a broker who's going to guarantee you instantaneous fills on your orders or to get you the best fills. Sure, it's a great marketing gimmick, and sure, it's a great advertising point for them, but no broker is going to be able to tell you for sure, hey, if you put in that order, I'm going to get those shares over somebody else. I mean, there's really no way to track it. There's a lot of gray area there in terms of the speed and partial fills in terms of, I wanted 10,000 shares, but somebody else wanted shares, and I only got 2,500, but somebody else got some more too. So why didn't I get all that? Why didn't I get my whole 10,000 before them? Just a lot of gray area. You're going to hear all sorts of theories on it, but at the end of the day, nobody really knows. Maybe that's not the answer you're looking for, but that's the honest answer. In fact, at this point in time, when I record this, there's a lot of controversy going on in terms of, the stock market being rigged, and just it covers this very stuff. Hot execution speeds, who's getting filled, supercomputers hopping in front of other orders, and all that stuff. So all sorts of hoop and holla. There's all sorts of talk. I'll just leave it at that. I don't know what I was going for there. But can you tell we've been hanging out for a while and I've been talking? I'm starting to lose it here. But anyways, there's all sorts of, talk about and explanations and accusations and theories about execution speed and how things get filled. So, at the end of the day, a lot of theories out there, but when you're talking about computer code and computers and algorithms, and then you throw in supercomputers and all that stuff, it's just a very gray area. So that's when I'm leaving it at that. But again, market or brokers are gonna use that as a marketing gimmick. They're gonna best execution speed, best fill rate. Going to use those sorts of terms. And yeah, I'll admit some brokers are probably better than others, but as far as sitting there and saying we guarantee that we're going to get you the best, or if you want all your shares, we're going to guarantee you're going to get every single share. Nobody can make those guarantees. All right, so this is another one of my biggest pet peeves out there. Small prints. Let's just first talk about small prints in general. I don't know. I'm not sure. But to me, it's just an order being broken down into smaller orders. I've had numerous times where I'll want shares, and then it's broken down to 3 orders, and one of them's like 100 shares or something just small that makes no sense, but it's all part of my share. So if you were to take that 100 share and then multiply it by the share price, you're thinking, why would somebody buy 100,000 or 100 shares? Why would somebody buy $2 worth of shares and then pay $8 in commission? Well, no, that 100 share order was part of something else. Sometimes maybe they'll just show up all alone, but that's where the whole manipulation thing comes from. And it's not manipulation by market makers, it's manipulation by traders. I mean, you see this all the time, and this is some things have been added since the last time I've looked at one of these lists, but 007 means accumulated shares. I don't know about that. 999 fake wall, never heard of that one. 911, that I've seen that's supposed to mean pending news, I guess, here, but I've also seen it mean short squeeze is coming. 505 short on shares. 500 gap to stock. I mean, you read all these. This is all garbage, pure garbage. MMs are not people. They don't sit at a desk and then just start talking. If MMs were people and wanted to talk, don't you think they'd just pick up the phone? Oh wait, no, because then the SEC would know what they're doing. Don't you think the SEC then would know about these market maker signals and figure it out from there if they really thought they existed? I mean, like I said, common sense goes a long way here, folks. And I'm not saying you listening to this right now believe any of this, but people out there actually believe this garbage. And if you don't believe me, go to a stock and enter in 911 shares and then watch the tape. Odds are, unless they break up your order, you're going to see 911 shares all of a sudden show up. What does that mean? Does that mean that there's pending news? No, that means that you just bought 911 shares. If anything, this is a great way of trader manipulation, not market maker. Traders will buy this 911 and then go out on the message boards, on social media, on chat rooms. Oh, did you see the market makers 911 shares? Must be news coming out, must be news. And no, they're doing that because they want people to start to smack the ask, and more than likely they're trying to sell shares on the ask. They're just trying to manipulate things with these stupid signals. What's another just dumb one? 400, keep it sideways. If you don't believe me, go buy 400 shares and watch a 400 share print show up on the tape, and then people saying, oh, hey, the market makers want to keep it trading sideways, or take the price down so I can load shares. We're going to get to that one later. No, nobody wants to load any shares, and there's a very easy way to stop taking the price down, and we're going to get to that later. So can you tell this drives me nuts? I mean, this is just all garbage. It's all a joke. It's all a smoke screen. There are no signals. Again, if the market makers wanted to talk, and if they were human beings, let's first just assume that they're human beings, even though they're not. But let's say they're human beings that sit there. If they wanted to talk and determine something, they could pick up the phone. But then I know what your rebuttal is. Oh, no, because all their phone calls are recorded so they could get in trouble with the SEC. Okay, well, if these geniuses on the message boards are talking about knowing the market maker signals, I would think that the SEC would know about these market signals too and would be able to research there and then connect all the dots that, oh, this is what's, no, it doesn't work like that, all right? So market maker signals, they are a huge hoax, a huge scam. Again, don't take my word for it. Go and buy 911 shares, watch the tape, watch that show up, and then, you can see who exactly is trying to lie or stupid or mislead people out on the message boards or whatever, because they're going to start shouting, oh, penny news, or some people say, oh, the shorts, a squeeze is coming. It's such a joke. Okay, I'll move on. Maybe sometimes you've heard somebody say, oh, they just painted the close, or is anybody going to paint the close? So what does that mean? Well, how many prices does a stock have? Please say 2. I really hope that your answer is 2 by this time in the course. They have 2. So when a stock has had multiple bid whacks going into the close, meaning, probably within the last 5 minutes or so, and then within the last few seconds of the day, a trader is going to hit the ask for a small amount of shares. So maybe a 100-share order, or better yet, if it were me and I wanted to manipulate something and I wanted to paint the close, I would buy 911 shares at the last second and I would paint the close. What does painting the close do? Well, it just makes sure that the stock's in positive territory. So usually painting the close happens when a stock is hovering right around either being red on the day or green on the day. So in this example, and I totally just made this up, maybe a stock is trading at, right down around down 5%. And then at the last second, I come in, let's just say, and I buy 911 shares, and all of a sudden, boom, it's up 4%. Well, what I'm trying to do is I'm trying to hide the fact that it was closing bearishly. Like I said, before I just threw up that last little order at the last second, there was all these bid whacks happening. So I'm trying to conceal the fact that, there is some pretty much bearishness going into the close. This could also be, sometimes it's the same as painting the chart. Oh, somebody just painted that chart, meaning the chart was pretty much red going in, and then all of a sudden, last second, somebody threw up a small order in order to paint the close. Well, in my case, if I wanted to paint the close, I'd do 9/11, and then I'd say, oh, see, news must be coming. There's news coming soon. Might not be, tomorrow morning or after hours, but it's coming soon. And people would, oh, yeah, look, 9/11, the last trade of the day. I mean, you see, it's not that difficult. It's buy a 911 shares, and then you can make up any story you want. And there's a sucker born every minute, so people are going to believe it. But does that mean any manipulation is going on by the market makers? No. It's all the trader sitting there, painting the close at the last second of the day, and then making up a story with it. Like I said, 911, that's what I would do. But a lot of times it's just 100 shares or something like that, and then people will create all sorts of stories around it. But at the end of the day, painting the close just means you're trying to take the chart from, or it can be opposite. Sometimes if there's a last second sell, people say, oh, the shorts are here. They want the chart to close red, so they bid whacked at the last second. And usually it's just somebody trying to get out. But regardless, that's what painting the close is, or painting the chart, just quickly changing how it's going to close at the last second of the day. Hopefully this is review for you, but a lot of times, the people on message boards and all that stuff, they try to manipulate things, make it sound like an explosion is right around the corner. And yes, sometimes it can be true, but there's more to it than that. And now that you've taken this course, the more to it. You know how to define that. You know what to look for. So let's just say this is what the current level 2s look like, and then people out there saying get through 6 and we're at 10 cents. Well, yeah, I mean, true, according to level 2s right now, get through 6 cents, and then the next sellers are up there at 10 cents. However, what are some problems with this? What do we need to look for now that you're highly educated in level 2s? Well, the first thing is we need to remember market makers represent more than one client. So yes, currently this client for Knight and E-Trade, they want to sell for 6 cents. But what happens so let's go back to our market. Remember, Knight represented Grandma and the ballerina. So let's say the ballerina wants to sell at 6 cents, but then the Grandma also says, no, I want to sell for 6.5 cents. So because Knight needs to represent the best order possible, which is 6 cents, that's going to be right there. However, as soon as these shares are gone, Knight's going to go and represent Grandma. So where's Grandma going to be represented? At 0.065. So no, it's not like Knight all of a sudden jumps to 10 cents and the price is going from 6 to 10. Now there's going to be a little some resistance, a little market maker there at 6.5 cents. Same thing for E-Trade. If they're representing, so right now E-Trade represents our Rivervan trader, and let's say he represents Rivervan trader's whole family. Well, if Rivervan trader wants to sell at 6, and then Rivervan's wife wants to sell at 7 cents, then as soon as these shares are gone, E-Trade's going to hop and start to represent his wife at 7. So now you'd have 0.065 by 0.075 or 0.07. So is the ask all of a sudden hopping to 10 cents when these market makers start to despair? No, it's not. On top of this, remember, we got to use the distance rule for dilution. So VFIN's right here. If VFIN's diluting, maybe he's just going to go to 0.061. as soon as, everybody else disappears. Does that mean that it's thin up to 6? No, theoretically, VFin could make this a very, very, very hard struggle to get to 10 cents if he's just using our distance rule going in very small increments. So yeah, a lot of people will try to twist and manipulate things with the partial truths of, hey, very thin to 10, very thin to 10. Well, yes, it is very thin to 10, but you got to remember these two represent multiple clients, and if Billy Bob here is diluting a bunch of shares, then he's going to move in small increments, and it's going to be a very long journey. It's not thin at all. Technically, let's just wipe out, let's say Knight and eTrader never here. Let's say they're down at 10 cents, and you only have one market maker at 6, and then everything else is at 10. If VFin is diluting, is that thin? Is it going to be an easy journey up to 10? No, absolutely not. It's going to be a very long and just it's going to be like walking through quicksand, walking through thick mud to try to get from 6 to 10 cents if VFin is diluting. So yeah, technically speaking, if these MMs are gonna don't have much for sell, VFin's not diluting, then yeah, it very well could be up to 10 cents. But just throwing out there on the message boards or believing, oh, it's thin because you look at this. Well, we all know now that we have to watch the tape and there's more to look for. So always keep that in mind whenever you see this sort of talk out there, that it's, get through that wall and it's very thin to this price. And, the price that they're talking about is, a lot farther up than what this current one is. Never works like that. There's always going to be other market makers that step in between 6 and 10 cents. All right, for maybe my biggest pet peeve, but it's a close match here. So the low volume walk down, you'll always hear it, especially in the mornings. Oh, it's the morning low volume walk down. The MMs are dropping the price on low volume because they want to load up. So are the MMs using magical powers to do this? How exactly are the market makers dropping the price down on low volume to do this? Is it because of magical powers, or is it simply because there is no demand on the bid side at those particular price levels? So what is the secret to preventing a low volume walkdown? Are you ready for this? This is really rocket science, so just get ready. Let's say you're using LAFC. Just put a massive bid in right there. Say, you know what? I want to take my retirement income. I want to take my wife's retirement income. I want to take my kids' college education, and I want to put in a share, and I want to buy 50 million shares at 0.055. Is there going to be a low volume walkdown? No, because they got to push through 55 million shares. That's it. If there is a low volume walkdown, it just means nobody over here wants to buy that many shares. That's it. There's not that much bullishness over here. They're not using magic powers to walk it down. Nobody wants to get loaded up. It's just there's no demand over here. Like I said, if you want to buy or if you want to stop a low volume walkdown, then just somebody needs to have a big old bid in there, or a group needs to have a big old bid. What am I saying when big old bid? That means that there needs to be bullishness in the stock. If it's a low volume walkdown, it just means there's no bullishness at those levels. That's it. There is no magical powers that's going to push through, a 50 million share bid. And I'm just making that number up. But point being, if you want to stop one, just throw in a huge order. That's what's going to stop it. Make it have to be high volume that lowers it down. But when you see a bunch of 5,000, share orders and the MMs just start dropping off, that just tells you there's no demand at those levels. There's no magical, powers being at use. There's just no demand. Eventually it's going to stop, and that's because, okay, that's where there's finally demand and their bid's going to have a lot bigger orders there. But now that you understand who's behind these market makers, so let's see, that's Slick Willie. So if there's not going to be a low volume walk down, then Slick Willie, all he's got to do is put in a massive order, or Rivervan Trader, or the mutual fund. But if all these people are just, I'll pick up a few shares here, and I'll pick up a few shares, then a medium-sized bid whack is going to drop down the bid, and you're going to see a bunch of smaller orders come through, and market makers are going to start dropping off. But that has nothing to do with the market makers dropping it down to load up. It just means that nobody is willing to step up and buy a lot of shares at these current price levels. So keep that in mind. The low volume walkdown is such a hoax. The only reason it's a low volume walkdown is because nobody wants to buy at those prices. If they did, then the price would stop going down. If people were out in the audience and wanted to buy, it's like this. You may have this, but it just means that the audience is very thin. There's not many people, in the front row. Then at this level, not many people in the front row. At this level, not many people in the front row. Does that mean that the sellers up on stage are using magical powers? No, it just means that there's kind of just crickets out there in the audience. So I know I'm harping on this, and I've probably, I'm beating a dead horse at this point, but it just drives me nuts. It's not rocket science. The market makers aren't dropping the bid, aren't doing anything to load up. No, it's just there's no demand right now on the bid. Nobody wants to buy anything at those price levels. If you want to stop it, then you definitely can. Single-handedly, you can stop it. Just throw in a massive buy order on the bid and watch the magic and watch the walk down all of a sudden stop. Okay, so this is competing with this other one for my biggest pet peeve. MM's holding it down. MMs want cheap shares. They're holding it down. Again, MMs always want cheap shares. They're always, trying to. No, we know what the problem is here. I'm not going to deny the MM holding it down here, but take a look, pause the video, and let me know what might be the problem here of the MM holding it down. What MM might be holding it down, and why is that the case? So if you said, after going through all the course, what I notice here is that Knight is right here at 0.059, and down here he's not at 0001. But Clay, wait a second, you said that Knight is a retailer. Yes, he is a retailer. 99% of the times he's a retailer, but maybe sometime he dilutes. Remember, don't get too locked in at the reputations. Get locked in on the MM's action. Again, I write that down. Don't get too focused on the MM reputations. Get focused and stay focused on the MM movement and position and where are they located. In this case, apparently Knight all of a sudden got into the dilution business because best ask, and then they're way down here. They're not even trying to manipulate, not even trying to hide the fact that they're doing it. Is Knight holding it down? Yeah, he is holding it down. Is he holding it down because he wants cheap shares? No, absolutely not. He's holding it down because he just wants to dilute. And remember, diluting, you want the most value for their money. The CEO, the financiers, they want the most value for those shares. So no, they don't want the price to go down. Are they going to hold it down? Are they stupid about it sometimes? Yes, absolutely. In this case, are they being stupid about it? Yeah, I'd say so. I mean, like I said, at least try to manipulate it. At least try to throw in a bid up here and make it look like you're interested. But in this case, I mean, it's pretty straightforward. So, keep that in mind. Anybody that's holding it down, maybe it is shorting that's holding it down. But remember, if they're shorting, they're going to be active on the bid. So one more time, don't get too focused on the reputation of the MMs. Stay focused on the movement and the location of the MMs. Now, in the one case study, I think it was the one I think I know it was where it was 15 cents by 16 cents. But the transfer agent, maybe you're not sure what that is. I'm getting ahead of myself. Transfer agent is the person that keeps track of the share structure for the company. In penny stocks, you'll see it a lot. Oh, I called the transfer agent and they say no change in the share structure. And while that may very well be true, sometimes those numbers, it's not like the transfer agent sits there and watches the float increase or anything as it happens. They're just getting daily numbers, and it's not the real-time data. However, a very quick way to figure out how many shares a company has trading out in the float, how many are available to be passed back and forth, is just looking at this. So take a look at this level twos and form some thoughts on it. So take a look, and I'll pause it. And now take a look at this level two. So let me ask you, which one do you think has more shares in the float already? This one right here or this one right here? Again, this one right here or this one right here? So my point being, the size of the box is a great way to gain a real-time estimate on the size of the float. Here, yeah, there's some market makers, but that other one we looked at, boy oh boy, the size of the box was a lot bigger. There was a lot more market makers involved, which tells me that there's probably a lot more shares out there. So I look at it like this, the more market makers out there, the more shares that are going to be already out there. And remember, as traders, that the float, that's the only thing that matters to us. We don't care about restricted shares and all that stuff. If you're an investor, yeah, then you care about, why is the company selling shares? Aren't they bullish on? Who cares? What's the float and can the price move? That's what we care about as traders, and that's what our attention and our focus on level twos needs to be. And then finally, we'll take a look at this since we've determined, this is definitely a low float type level two. And the thing out there is, people talk about low floats like it's such a great thing. And while I'm not going to deny, I will never deny that it can't be, or that it can be beneficial, but a great thing, I don't know. Let's apply some rules. So let's talk about our future enemy rule. 1, 2, 3, 4. Holy smokes, 10 cents, and that's some great potential. I cannot deny that at all. Great potential using the rule of the 4 friends, or the future enemy rule. Now let's take a look at the friend rule. 1, 2, 3. Okay, so, then I don't know. I mean, if you get in right now at 0.062, I mean that's basically a 2-cent risk that you're taking on. Yeah, the reward is very high, but the risk, that's a pretty big risk too. And if you use a 4 friend rule, then look at that risk. Risk picks up that much more. So what is my point? It's a super high risk, high reward. There's very nice upside. However, the downside risk is just as substantial. So yeah, a lot of people talk about low floats and brag about it. low floats are popular because, yes, the price can move. But keep in mind, the price can move just as fast in the opposite direction because there's not that many shares out there. There's not that many market makers. So again, 1, 2, 3, 4. Yep, I will never deny that there's some nice upside potential here. 1, 2, 3. Possibly if you use 4, there's just as big of risk. So point being, when you pull up these level 2s and people are proclaiming low float, just know that if you get in, A, your risk is super high, and B, you need to be super aggressive on your profit taking. And that's kind of the moral of the story here. But hopefully you can kind of see why, or not hopefully, you should be able to see now after everything we've gone through why the risk is high here and why you would need to be super aggressive on any sort of upwards move in terms of locking in profits. Because yeah, it can shoot up, but you better be selling in the strength because it can go down just as fast. And then for the final what if game, so let's just say that I've been wrong before, or I have been wrong before. So let's say that MMs are indeed people. So they're not computers, they're not algorithms, they're not computer code, but they're actually people that sit in a cubicle with an evil laugh and they manipulate penny stocks. So this is a market maker right here, and they are evil, they are manipulating stocks. Who cares? Are we here to trade stocks and make money or file reports with the SEC about something that may or not be true? I don't know about you, but I'm here to trade stocks, and if the stock can go up with or without manipulation, then that's all I care about. If the stock's not going up, or if the stock is going down and it's because or not because of manipulation, who really cares? What direction is the price going? Down. That's what we need to care about as traders. Am I going to go waste my time filling out a SEC report about, oh, Knight, that manipulator, I'm going to tell the SEC, Knight's manipulating the stock? No, don't waste your time. Find something where the manipulation is taking it up, if manipulation is even taking place. As you can see, very passionate about this, but it drives me nuts. If you are saying, oh, I lost money because that market maker manipulation, no, you lost money because you didn't make a good trade. That's fine. It happens. Everybody loses money. But don't sit there and try to blame it on other stuff. And then don't sit there and I'm going to fill out a SEC report and report Knight to the SEC because they're manipulating stocks, blah, blah, blah. No. If they're manipulating it or if they're not manipulating it, which direction is it going? Like I said, if the price is going down because of if the price is going down because of manipulation, then I don't want it. If the price is going down and there is no manipulation, I don't want it. If the price is going up because of manipulation, I want it. If the price is going up and there is no manipulation, I want it. Hopefully I'm getting the point here. As traders, we just care about what the price is. So who really cares what's going on? I mean, I'm very confident in what I presented in terms of the manipulation that does take place, aka diluters just throwing up fake little bids to try to make it look like there's buying or people interested on the bid. But as far as what you'll see out on message boards about low volume walk down, the MMs want to get loaded up. What a joke that stuff is. So again, at the end of the day, who really cares? Maybe I'm totally wrong, but does it matter if I'm wrong, and does it matter if manipulation is taking place? If the price is going up, that's what we want. That's what we want to care about. So hopefully this helps clear some things up. Hopefully it helps kind of put you back into reality that, at the end of the day, it's interesting to discuss these sorts of things, but it really doesn't matter because as traders, we just care about which direction is the price going.